You're listening to Workplace Perspective, an employment law podcast presented by SAFFIRE Legal. Workplace Perspective is a regular podcast series for employers and employees focusing on education, training, and the law to help organizations of all sizes develop and maintain successful workplace relationships. The opinions expressed by guests on Workplace Perspective do not necessarily reflect those of SAFFIRE Legal or its attorneys and should not be considered legal advice. And now, here's your host, founder and principal attorney at SAFFIRE Legal, Teresa McQueen.
Thank you, James, and welcome everyone to Workplace Perspective, where we are striving to raise the bar at workplaces everywhere. Today's show is the first of a two-part episode we've put together in our series of COVID-19 related shows. Today, we're talking with Greg Dill, Vice President of Commercial Real Estate and SBA Lending at Union Bank in Irvine, California. Greg will be talking about the Coronavirus Aid, Relief, and Economic Securities Act, better known as the CARES Act, which provides numerous resources for small businesses, including the Paycheck Protection Program, the Emergency Economic Injury Grant, and the Small Business Debt Relief Program. With the time we have today, we're going to try to touch on as many of these resources as we can. It's going to be a great show. Don't go away. We'll be right back.
The opinions expressed by guests on Workplace Perspective do not necessarily reflect those of SAFFIRE Legal or its attorneys and should not be considered legal advice. You're listening to Workplace Perspective, an employment law podcast presented by SAFFIRE Legal.
Welcome back to our listeners, and welcome to Workplace Perspective, Greg Dill.
Hi, glad to be here, Teresa.
We're really happy to have you. And before we get started, I want you to tell our listeners a little bit about you and what you do.
Sure. Well, my name is Greg Dill, the SBA lender. What I do is I focus on working with business owners and providing guidance and expertise on their commercial real estate and business acquisition financing needs, and it's typically through low down payment programs such as provided by SBA financing. So I always say that I work at a bank. I'm not a banker. What I try to do is work hand in hand with business owners and provide them with the guidance and the expertise so that they can make the correct decisions about their financing needs.
Well, I love it. You are obviously the right person to talk about all of these new CARES Act provisions, and there's so much to cover. I want to jump right in. Let's get started. If you could just talk really briefly, because I want to get into talking about the Paycheck Protection Program to start out with, but can you sort of just give a brief overview of the CARES Act?
Sure. Yes. So there's been a lot of different things that have been going on here with the federal government and the Treasury to help small businesses. So there's a few different items that we'll be talking about that span from some of the economic and emergency financing relief, some of the Paycheck Protection Program, which you had mentioned. These are just going to be, because of the COVID-19 virus, that's a pandemic and obviously affecting everywhere in the United States. The federal government has stepped in to help out small businesses with a number of different options, whether it's from independent contractors all the way up to large enterprises. So they're just trying to maintain some of the commerce and obviously maintain employment when we are struggling in this economic slowdown.
All right, so that's the overview. Let's get specific. So the CARES Act provides the three sort of programs that I kind of mentioned in the intro, but let's start out with the first relief program that we sort of mentioned, the Paycheck Protection Program. This one has been of a lot of interest to at least a lot of people I know. So can you tell us a bit about the Paycheck Protection Program?
Sure. Yes, this is probably the one that everyone is very excited to hear and to be put in place. So what this is trying to maintain employees and employment for small businesses. This is actually run through banks or qualified lenders, as opposed to one of the other programs that we'll talk about in a moment. But what this intends to do is to maintain employment during this hopefully short economic turndown. And what the gist of it is, it's going to provide up to 2.5 times 1 month payroll, and that's based on the last year 2019's payroll. And this is going to be conducted, like I said, through banks, and then provided to individuals or individual businesses based on their employees. And in roughly 75% of the monies that are going to be loaned are to be used for the employees and for payroll, and up to 25% can be used for some other opportunities, whether it be rents or mortgage interest, some utilities and the like. And the goal of utilizing those funds for these particular instances is going to be that the loan is going to turn into a grant based on the monies that's spent over the 8 weeks following the distribution of the funds.
Okay, so you've been dealing with this a lot, I'm assuming. And so can you share with us some of the more common questions that you're getting asked about this particular program?
Sure. I think the biggest question is, how do I apply for this? And like I'd mentioned previously, that this has to be applied through a lender. So what I'm suggesting to everyone that I talk with, whether it be from my bank or other banks that I'm being referred to, is for them first and foremost to speak with their bank, speak with their business banker if they do have someone assigned to them. The reason being is because of the demand, most banks are only able to help out their current banking clients at the moment. And so that's the first step. I've also rounded up a few different local banks based on information I've received from the SBA and some of the webinars that they've been giving, and have provided information to individuals if their bank for some reason is unable or unwilling to help them out. It might be that they've already exhausted the amount of funds that they have allocated, or maybe they are not even providing these types of loans. So there are alternatives for that, but I think the main question is, how do I get started with this? The other one would just be what are the documents that are required? The SBA lists a few documents, and there's some minimal documents that are going to be required. One is basically a 2-page application. Another is going to be a list of payroll, which hopefully that can be obtained through your payroll company. And I know a lot of these big payroll companies are working hard to provide that to business owners so it can make this process easy for them.
I've had somebody ask me, you kind of touched on a little bit, but are these programs, the Paycheck, all of them, are they actually funded? Or are you saying, so some people have funds, some people don't? That's been a confusion for a lot of people.
Yeah, so as of right now, with the Paycheck Protection Program, there's been, I believe it's $349 billion that has been allocated for this program. And basically what's happening right now is all the banks are getting the funds allocated to them through the process, and they have a portal with the SBA that they're earmarking these requests. Once the funds are done, unless there's an increase them through the government, that's all there's going to be. So what people have been told, which is correct, is that they're on a first-come, first-served basis. So in I guess the gist of this whole program is make sure that if you haven't requested, basically do it as quickly as you can, and then the funds, once some of the paperwork and the forms are in place, then they can be distributed. Because that's another question: when are we going to get these funds? Unfortunately, the banks do not know yet, because the SBA and Treasury haven't provided all of the loan paperwork and documentation that's needed. So although these funds have been allocated to individuals that have gone through and done the request, they haven't been distributed yet.
So then the best thing to do is just keep checking back if you're in contact with your bank, or is there
Correct.
Another way to do it? Are they listing anything, that people can check?
I haven't seen that. I'm not sure what individual banks are doing. What I've seen through my bank is that once the client has been approved, they've been indicating the amount that they have been allocated. But I have not seen anything yet in terms of when they're going to notify clients of the funding. So I think we'll probably hear it in the news. We've heard a lot of things in the news, but once these checks start going out, because I know some of the normal stimulus checks to individuals as well as some of these other programs have started being sent out, I think it should be pretty widespread, because this PPP program, it seems like everyone knows about it, which is definitely a good thing.
Yeah, this is one of the more prevalent questions I keep getting asked, if I know anything about this kind of stuff. And I keep saying no, but I'm talking to someone who does. So hold on.
Mm-hmm. Sure.
One of the questions, I don't know if you can answer this or not, but I know one of the questions that somebody had asked me was about the interplay on the tax side between this loan, this type of the Paycheck Protection Program. It is a loan, right?
Correct. So, and that's one of the things that I want everyone to be aware of. So, first and foremost, this is a loan. It's a loan, very low interest rate loan. So it's at 1% interest rate, and it's over a 2-year period, 2-year amortization. The first 6 months are going to be covered anyway, and then after that 2 years, it's supposed to be paid back. That's if it does not turn into a grant. So the goal for most business owners are going to be to utilize these funds and be able to prove that these funds were utilized for mostly the payroll, which is up to 70 or 75% or more, and then the other 25% are allowed to be used for other items and still be converted into a grant. So I want people to know, go into this thinking and knowing that this is a loan first and foremost, and then the plan is for it to be changed into a grant. And I think maybe you're getting at on the tax side. In terms of if it does turn into a grant, what I've heard is that there won't be any taxes that are needed to be paid on it. That's what we've been told thus far, but those things can change.
Isn't that interesting? I find it amazing that, it's a great thing, a benefit that people can take advantage of. But it's kind of scary because you're asking business people to sort of sign up for this thing that, well, it's a loan, could be something else, could change in nature.
Yeah.
It's sort of scary, don't you think?
I do. I mean, I think that's why I'm also telling people, unless you really need this, do not apply for it, right? I know some people are getting it because of a safety net, or others are saying, hey, this is free money here. It may need to get paid back, and if it does, I was doing a quick calculation. If it's actually amortized over 2 years and you have $100,000, it's about a $4,200 payment a month. So, for most small businesses, that's not chump change. So if when people really start thinking about how this is, if it were not to turn into a grant for one reason or another, then that is money that's going to be owed. The other part is, if there is no personal guarantee, there's no outside collateral that's being put against this. So in case there's businesses that aren't able to continue, that they do shut down their bankruptcy, obviously that's going to be a benefit for someone not having to pay that back. But no one should be going into financing or moving forward with their business if they do have that in mind. But yeah, I do agree. There's so many changing things, and that's why I said first and foremost, we know that it's a loan. We've been told it can be converted into a grant based on the items that I'd mentioned, and then hopefully it will, and the business will continue.
Wow, that's great. Well, that's some great information on that program. Time's going by quickly. I'm getting the break sign, so we're going to take a quick break. And when we come back, we'll focus on the CARES Act Emergency Economic Injury Grant. So stay with us. We'll be right back.
COVID-19, better known as coronavirus, has spread throughout the world. Information about children with this disease is limited, but they are known to have had mild symptoms. Many organizations are responding accordingly depending upon their area. It's best to stay home and away from others, especially when sick, and continue following healthy hand wash guidelines, covering mouth and nose and not touching your face or high-touch surfaces. Clean and disinfect high-touch surfaces regularly, and for more information, please visit cdc.gov/COVID-19. Thank you.
If you enjoyed today's show, do this. Share us. Like us. Give us a review on your favorite podcast app. It sure means a lot to us, and it ensures that more people tune in and raise the bar at workplaces everywhere.
Welcome back, everyone. We are talking with Greg Dill about the CARES Act. We just talked about the Paycheck Protection Program, and now we're going to move forward and talk about the Emergency Economic Injury Grant. So first, just tell us a little bit about the grant program and how it differs from the Paycheck Protection Program's loan aspects.
Sure. So the grant program, that's actually in combination with something that's been around for a long time, which is called a disaster loan, or SBA disaster financing. The full name is the Economic Injury Disaster Loan, or EIDL. Where we see this and have seen it in the past is when there's something like a hurricane or a tornado that goes through a specific part of the country and wipes out some businesses, and then the funds are needed for that. So it first must be approved on a federal basis, then it's approved on the state basis, and then from the states it's approved county to county. Here in California, every county is actually on the list for this, and so this is something that's the funding for this is provided through the SBA, and you do not work with a lender on it. You go directly to the SBA website, which is sba.gov/disaster. So when you apply for this disaster loan financing, they're going to ask for a number of different documents, the things that need to be uploaded, and then they may come back and ask for additional items. But once you're finished with applying for the disaster relief program, which it's sort of a black box on how they determine who or the amount of financing that is available, we do know that once that financing is granted for businesses, it's at a 3.75% interest rate fixed, and it is up to 30 years. But that's usually when something happens where maybe a building is lost, like I mentioned, in a hurricane or a tornado. But in this case, what I've been hearing is that the financing has been in the 5 to 10 year range. After you're done applying for that, there is an option to take advantage of, which is the emergency advance financing, which can be a grant. Again, this can be up to $10,000, and if you are not approved for the emergency financing, the EIDL or disaster loan, then this is turned into a grant. So another one of these, sort of, I want to call it wishy-washy, but we don't know the specifics because you don't know if you are going to be allocated funding through the disaster loan program. It seems that how they are doing the $10,000 is going to be based on employee, and it's up to $1,000 per employee, up to $10,000. I have heard from a number of individuals, business owners, that these funds actually have been sent out, or so they're starting to be sent out, these $1,000 per employee. But again, what we do need to know is that you are applying for a loan. This is an advance of the loan, but if your loan for the disaster is not approved, then it is turned into a grant, and you do not have to pay that back.
So that's interesting. So this was something that was in place because we're finding the same thing. So like with unemployment benefits and lost income benefits, the same sort of thing. There's a lot of things that were already in place for disaster. You just have to reach a certain level, right? So the government has to declare, then the funds have to be made available, but there's already processes in place. So is this one? Oh, go ahead.
No, that's correct.
Okay, so is this one? So this is something that was already in place. Has it been modified, other than saying, the COVID, disasters that we're seeing because of COVID in a business now qualify, or have there been other provisions that have changed?
Well, so there have been provisions, and I think whenever these are done, the term of the financing would change. So although, like I had mentioned, it's up to 30 years, they're probably deciding on this as it's more of a 5 or a 10-year term, as well as the interest rate. I believe initially they had approved that it could go up to 4%. They put it down to 3.75%, made that a fixed rate as well. And then the other thing is that the amount of the financing is maxed out at $2 million. I had mentioned before, it's like a black box because you don't even request a specific number of how much you want or you need. It's just given to you if you're approved based on some formula that we don't know as the lenders. Again, we're not, lenders are not dealing with this specifically. It's actually the business owner that goes through the website for the SBA and does that. But in terms of the specifics of it, again, up to $2 million, 3.75, and then they do have an advance of $10,000, which is more of an emergency because it's a quicker turn on that. And what we're hearing as far as the processing times for the actual economic injury or disaster loan is anywhere from 2 to 3 weeks for them to process, and then at least another week or two once they're able to do the funding.
Wow. So can you give that, I think you gave the website once. Can you give the website again for the SBA?
Sure. It's sba.gov/disaster. And you can go on that website. You'll find out where it says to apply for this financing. It'll walk you through the steps. There's a number of steps. It was taking people quite a bit of time. I've heard that they have improved the bandwidth on the website, and hopefully it's not stalling out on anyone. But initially, it was taking people a number of tries and a number of hours to go through and get everything done on there. But make sure, what else I've heard is you can save, so when you go back that you haven't lost anything if you have to wait a little bit to go back and upload some additional documentation.
Wow. Hours. It's amazing how these systems are getting so inundated. I'm getting the wrap it up signal from Paul, but I want to say, Greg, I know it's gone by really quickly, but you have given some fantastic information, and that's going to be it for this episode. And I want everyone to be sure to listen to our follow-up show where we're going to talk more with Greg about the Small Business Debt Relief Program and hear his final thoughts on the CARES Act and its impact on the small business community. Greg, I want to thank you for joining me and sharing your thoughts and experiences with our listeners.
Well, thank you very much. Hopefully I provided some guidance and some help, and I'm cheering for all those small businesses across America.
Me too. You've given some wonderful information. Thank you so much. If you want to connect with Greg and learn more about SBA lending at Union Bank, you can reach him at greg.dill@unionbank.com. That's greg.dill@unionbank.com. You can also connect with Greg via our website at saffirelegal.com/podcast. I want to thank also our listeners, My Radio Angels, James and the Knave at Night, Workplace Perspectives team extraordinaire, our engineer-producer, Paul Roberts, our associate producer, Melissa DeLacy, music provided by the very talented Stephen Versaloni. Thank you all for joining us on Workplace Perspective, and until next time, keep raising the bar.